Rolling over your 401k into an IRA can be a smart move, but it's crucial to avoid costly tax penalties along the way. Whether you're looking to preserve your wealth for retirement or simply get more control over your investments, this process can seem complicated, and if you don't do it correctly, you might end up paying unnecessary taxes. But don't worry, I'm going to break this down for you in a way that makes it easy to understand, and by the end, you'll know exactly how to roll over your 401k into an IRA without running into tax penalties. First things first, let's talk about timing. One of the biggest mistakes people make when rolling over their 401k is not understanding the 60-day rollover window. The IRS gives you 60 days to complete the rollover from your 401k to your IRA without penalty. If you miss this window, the IRS may treat the distribution as taxable income, and you could be hit with a 10% early withdrawal penalty if you're under 5912. So stay on top of the timing, plan ahead, and make sure you get that rollover done within 60 days. Now, another common mistake is not doing a direct rollover. If you take the funds out of your 401k and don't directly deposit them into your IRA, the IRS will withhold 20% for federal taxes right off the bat. That means you're only getting 80% of your money, and when you deposit it into your IRA, you'll have to make up the difference to avoid penalties. A direct rollover means the money goes straight from your 401k to your IRA, and you avoid any tax withholding. It's the simplest way to make sure you're not giving the IRS an unnecessary chunk of your savings. But here's where it gets a little tricky. If you're considering a traditional IRA rollover, it's essential to keep in mind that any funds in your 401k that are in a pre-tax account will be taxed as ordinary income once you roll them over. While this is fine for many people, it's something to be aware of. You'll want to make sure you're accounting for this in your tax planning so that there are no surprises when tax season rolls around. Another option you may want to consider is a gold IRA. If you're serious about protecting your wealth, especially if you're a retiree with a significant amount of savings, say 100K or more in your 401k or IRA, or even 5M plus, then a gold IRA could be the perfect fit for you. It's a great way to diversify your portfolio and protect your retirement savings from inflation and market volatility. If you want to learn more about how a gold IRA can help safeguard your wealth, be sure to check out the first link in the description for a free guide to gold IRAs. It's the best step you can take to make sure your wealth is protected in these uncertain times. So, as you think about rolling over your 401k, make sure to do it the right way. A direct rollover, the 60-day rule, and understanding your tax implications are key. But remember, a gold IRA is one of the safest ways to protect your wealth for retirement, and it's something you should definitely consider if you have a significant amount saved. If you're serious about protecting your wealth in the next 2 weeks, take action now. To wrap it up, if you have more than 100K or even 5M plus in savings, and you're looking for a way to protect and grow your wealth, a gold IRA could be exactly what you need. Click that first link in the description for your free gold IRA guide and start securing your future today. Don't let tax penalties or poor planning impact your retirement. Roll over your 401k the right way. And remember, diversifying with a gold IRA might just be the smartest move you'll make.